What is up, everybody? Today I will be showing you guys the best 15-minute time frame gold trading strategy. Why am I going to make this video? Because I know a lot of people do not have the patience to swing trade. And I completely understand it. So that's why I'm making this video. I've done a lot of research, backtesting, so you guys can copy this exact same system. Let's get into it. What we're going to do first on a 15-minute time frame is we're going to determine our swing structure. What is our swing structure? Our overall market structure. Okay, so this is our swing structure, and this is what we're gonna mark. So let's say we create a low, a high, a lower low. This indicates a break of structure, right? Everybody knows it. Break of structure, we close below the previous low. Now we have a range. Okay, this is gonna be our range. Let me just move it out of the way real quick. If we have our range, we know where we are trading from and where we are trading into. We are going to have a pullback inside of this phase, especially if we're going to mark it out with a 50%. We're going to see a retracement above the 50% to then look for movement back in towards the downside. If we're going to look at the fractal structure, we can still see lower lows, lower highs. But in the pullback, we're going to see higher highs and higher lows. Why? Because that's a small uptrend. This is still going to be that major same break of structure. Okay, so this is this move, but just this is going to be on the lower time frame. And what we're going to do is we're going to find these points of liquidity. Okay, so we're going to mark out these highs right here. Once we marked out these highs, we're going to see how price reacts from it. And especially, we're going to look at the highs inside of our discount zone, our premium zone. Now, we see that this high is in our premium and this high is in our premium or discount. I'm sorry, discount. After that, we're going to wait for a market structure shift. This is going to then create our supply or demand zone. In this case, we're making a supply zone, which we then want to get retested to then push lower. Let's get in towards the real life examples. Here we can see clear swing structure. We can see that we put in a low, a high, and here we go lower. So this is our swing structure. We're going to mark this out here. And this is going to be our break of structure. Okay? So this is the lower we broke structure from. This is also going to be our break of structure. So within this period of time, so this, once we break structure, this high will be our range high. And then once we put in this low, this is going to be our low. So we are inside of this range. Inside of the discount area, we have 0.5. We are above. So this is our clear zone where we're going to take an entry of. And we have this high. We have this high. We are this high. So these are all liquidity points inside of our area of interest. What can we also see? We have a clear area of supply that is going to be in control of the market. What do we see? We have a couple of stacked lows as well. So this is going to be our target. Now, this is also a liquidity high. So we're going to look at how price reacts from it. This is backtesting. So you guys, here we can see an initial reaction from this liquidity high, but we do not see a change of character, right? We are still breaking structure on the lower time frame right here. Okay, here we sweep out this liquidity. So we are going to look for, now we're pushing out to this retracement. We make a new higher high. We sweep out this liquidity. And now we want to see a close below this low. Now let's see what price does. Okay, price does close below this low. So now we have our third and final confluence. Now, what does this mean? Price is exhausted. You can see that price dumped hard. We took out this low as liquidity. We swept out the new high because we did not confirm a change of character. Here we did. So this is going to be our change of character. What are we going to create? We're creating a new supply zone. This is where I'm going to take my entry off with my stop right above the demand zone. And we're going to be targeting a new lower low. Because right on the swing structure, we're targeting just a new break of the new low. So this is going to be my my entry. I'm going to place my stop loss there. Why is it not working? Why is it not working? Okay, here we go. We risk 1%. Stop loss above the high. Sell limit here. Take profit there. We can see that price retraces back in towards this area of supply. Let's see on the lower time frame, we see this big wick. So price should dump back in towards the downside. We sweep out that high again. We make a new overall supply zone. And now we should hold price back in towards the downside. There we go. And we are targeting these stacked lows, as this is going to be our last low. That's it. This is basically the strategy. It's not hard at all. It's just follow big market structure. The important thing is that you know the difference between swing and fractal structure, right? So this is swing structure, and this is fractal structure. But yeah, just practice it, backtest it, and it will easily be one of the best strategies you will use, especially liquidity, supply and demand. It's going to be one of the best things you'll ever see on the charts, basically. So yeah, I hope you enjoyed. If you do, make sure to drop a like, subscribe, and I'll see you guys in the next one. Peace.